Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host here at AlgoBot, and today we're examining a strategy called Ema Gradient Pullback. This is a trend-following, pullback continuation approach that leans on three exponential moving averages and a reading from the Relative Strength Index. By the end of this video, you'll understand exactly how it defines a trend, how it waits for a shallow pullback to resolve back in the trend's direction, and how it manages risk once a position is open. Remember, this is educational information only, and it is not financial advice. Let's get into it. So what exactly is Ema Gradient Pullback? At its core, this is a trend-following expert advisor built for MetaTrader 5. Rather than trying to predict tops and bottoms, it aims to join a trend that already exists, and it only does so after price has taken a brief step back and then resumed in the trend's direction. That is what we mean by a pullback continuation approach, buying shallow dips inside an uptrend or selling shallow rallies inside a downtrend. The engine behind the strategy is a stack of three exponential moving averages, which the strategy calls a gradient stack. A fast, a middle, and a slow moving average must line up in clean order, and the slow average must be sloping in the trend's direction. Because a neatly stacked, sloping ribbon only appears when a market is genuinely moving, this design stays quiet during flat, choppy conditions, which are exactly the conditions where dip buying tends to bleed money. Layered on top of that is the Relative Strength Index, used here not to call reversals, but as a simple momentum health check. The strategy wants to see momentum that is healthy, but not overstretched before it commits to a position. This expert advisor is designed with trending foreign exchange pairs, metals, and index charts in mind, on timeframes from 15 minutes up to 4 hours, though the timeframe is chosen when you run it, not locked into the code. It suits a trader who prefers a rules-based, patient style, who is comfortable waiting for several conditions to align, and who wants risk defined objectively on every trade. It is not designed to trade constantly. As always, trading carries risk. Losses do happen, and everything here is for educational purposes only. Let's walk through the mechanics step by step. Everything the strategy evaluates happens on the close of a bar, so it never acts on a half-formed candle. First comes the trend gate, the gradient stack. For a long setup, the fast-moving average must sit above the middle one, and the middle above the slow one, so the three are cleanly stacked in bullish order. On top of that, the slow-moving average must be higher than it was a few bars earlier, confirming the trend is genuinely rising. For a short setup, everything mirrors, the fast below the middle below the slow, and the slow sloping downward. If the stack is not clean, the strategy simply waits. Once the trend gate is open, the strategy looks for a pullback and a reclaim. On the long side, it wants the previous closed bar to have dipped, meaning that bar closed below the fast-moving average, a genuine step back into the ribbon. Then the current closed bar must reclaim, closing back above the fast average. To confirm the pullback is decisively over, that same bar must also close above the previous bar's high. That is the momentum check. Only then does the strategy consider the pullback resolved in the trend's favor. The final filter is the Relative Strength Index. For a long, the reading must be at or above the floor, which defaults to 45 and no higher than 78. That keeps entries in healthy momentum while skipping moves that are already overstretched. The short side uses the mirror band, at or below 55 and no lower than 22. When a long condition is met, the expert advisor signals a buy. When the mirror condition is met, it signals a sell. Only one position is ever open at a time, so there is no stacking of trades. Risk is defined using the average true range. The stop loss is placed a set multiple of the ATR away from entry, 2 times by default. The take profit is set as a reward to risk multiple of that distance, defaulting to 1.8 times the risk. Once price moves 1 ATR in the trade's favor, the stop is pulled to the entry price, removing the initial risk. From there, a trailing stop follows price by 2.5 ATR, only ever moving in the profitable direction, which lets a winning trade continue while locking in gains along the way. Here's the same logic as it appears in MetaTrader. At the top are the input parameters you can adjust. FastEma, MidEma, and SlowEma define the three average ribbon, defaulting to 8, 21, and 50. Slow pullback sets how many bars back the slow average's slope is measured. RSI period and RsiLongFloor control the momentum filter, and the ATR block defines the risk model, with ATR stop multiple, reward risk ratio, break-even ATR multiple, and TrailAtrMult multiple. Now look at the long block. The variable long stack checks that the fast average is above the middle above the slow, and the slow above where it was earlier. The variable long setup then checks that the previous close was below the fast average. The current close is back above it. The current close is above the previous high, and that RSI sits between the floor and the upper guard. When both are true, the code sets the stop loss 1 ATR distance below price, sets the take profit at the reward to risk multiple of that distance, and calls trade.buy. The short block is the exact mirror. Short stack checks the averages are stacked in the opposite order with the slow one falling. Short setup checks the previous close was above the fast average. The current close is back below it and below the previous low, and RSI is within the mirrored band. When both hold, the stop loss goes above price, the take profit below, and the code calls trade.sell. Notice how both sides derive their stop and target from the same ATR distance. So risk is defined the same objective way whichever direction the strategy takes. Let's bring this to life on a chart. On screen, you can see price candles with the 3 average ribbon drawn over them, and the relative strength index in the panel below. Watch how the whole setup comes together. On the left, the market is climbing. Notice the ribbon. The fast average is on top, the middle average beneath it, and the slow average along the bottom, all sloping upward. That is the bullish gradient stack, and it tells the strategy a genuine uptrend is in place. In the panel below, the relative strength index is holding comfortably above the floor of 45, well within healthy territory. Now watch this candle step back. Price pulls in and closes below the fast average, a shallow dip into the ribbon. On its own, that is not a signal. The strategy is patient. It wants to see the pullback resolve. On the very next candle, price pushes back up and closes above the fast average again, and crucially, it closes above the high of that pullback candle. The pullback is decisively over, momentum has returned, and the relative strength index is still in its healthy band, above 45 and nowhere near the upper guard of 78. Every condition is now aligned, and you can see the buy entry marker appear. From there, the stop loss is placed a couple of ATR below the entry, just beneath the recent structure, while the take profit sits at 1.8 times that risk distance above. Price begins to advance in the strategy's favor. As it clears 1 ATR of profit, the stop is quietly lifted to the entry price, so the trade is no longer risking its original amount. Price keeps climbing candle after candle, and the trailing stop follows along behind. Finally, price reaches the take profit target and the long trade is closed, right where you see the take profit marker. Now the character of the market changes. Watch the ribbon begin to roll over. The fast average crosses below the middle slips below the slow, and the slow average itself turns lower. The stack has flipped into bearish order, so the trend gate is now open for shorts. In the panel below, the relative strength index has faded down out of the upper region and is drifting lower. Here comes the mirror image of what we saw before. Watch this candle rally upward and close back above the fast average, a shallow bounce inside the falling ribbon. Again, that alone is not enough. On the next candle, price rolls back over and closes below the fast average, and it also closes below the low of that bounce candle. That is the downside momentum confirming the rally is finished. The relative strength index is comfortably below the mirrored ceiling of 55 and still above the lower guard of 22. The sell entry marker now appears. For this short, the stop loss sits a couple of ATR above the entry, just above the recent swing, and the take profit sits 1.8 times that distance below. Price falls away in the strategy's favor. Once it has traveled 1 ATR down, the stop is pulled to the entry price, and from there the trailing stop rides down behind price as the decline extends. Candle by candle the move develops until price reaches the take profit target and the short is closed, right at the second take profit marker. So across both examples the recipe was identical. A clean, sloping ribbon to define the trend, a shallow pullback into the fast average, a reclaim with real momentum in the trend's direction, a supportive momentum reading, and then an objective, ATR-based plan for the stop and the target. That symmetry between the long and the short side is the heart of how Ema Gradient Pullback approaches the market. So there you have it, a full walkthrough of the Ema Gradient Pullback Expert Advisor. We covered how its three-average gradient stack defines a trend, how it waits for a shallow pullback to reclaim the fast average with genuine momentum, how the relative strength index keeps entries in healthy territory, and how the ATR-based stop, break even, and trailing logic manage each position from start to finish. Everything in this video is educational information only, and nothing here is financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and drop a comment with the strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.